Good morning, everyone. My name is Sakib Ryan, the resident crude oil trader here at JNF Capital. The date today is 9th February 2015. I will be giving you an insight into my positioning on the crude oil market. Before I get started, please note that investing in the financial markets is not for everyone. Losses can exceed deposits. Now, as you're aware, as I always mention, the markets are made up of bulls and bears, buyers and sellers. Well, my job here as a professional trader is simply to identify which one of the two entities is in control and simply align my clients' funds in the same direction as them. So, what are the bears doing in the market this week? Well, let's have a look at what's been going on fundamentally. So last week we had our inventories. They came out at, basically we were expecting a build of 4 million barrels. We had a blowout build of 6.3 million barrels. Now that's the fifth straight week of builds in crude oil inventories. And as you're already aware, I mentioned in my previous reports that we already have significant builds in the region of 400 million barrels of crude oil in US reserves. So from in an inventories point of view, we're well stocked as far as crude oil is concerned. Now last week it was the first trading week of the month. We had a non-farm payroll figure that came out. The market was expecting a figure around the 236,000 mark. Now we actually got a blowout figure of 257,000 jobs added, non-farm jobs. Now how does this affect crude oil? Well, basically a strong US economy increases the possibility of the Federal Reserve raising interest rates pretty soon. So the stronger the figures we get, the more consistent they are, the more likely interest rates will be raised sooner rather than later. As I've explained before, that will impact the dollar directly. Generally, when a country raises interest rates raises their interest rates, what you will find is that their base currency, their currency will appreciate. So in this case, the dollar should appreciate. Now, a strong dollar would basically put downward pressure on crude oil, so as they are inversely correlated. On another side of things, we basically had Chinese trade figures that came out. Now, exports were down 3.3% from about a year ago. However, the figure that was quite exceptional was the import figure. The import figure tumbled about 19.9%. Now, this data indicates lower fuel demand. And as you're already aware, as I've previously mentioned, China is the largest importer of crude oil. So we are exceptionally sensitive. Crude oil price is exceptionally sensitive to Chinese economic figures. Now, just to sum that up, we had some releases from OPEC as well as far as their production. Their production figures came out. And, surprisingly enough, everyone is raising production again. We've got Angola that has raised production by about 120,000 barrels, now producing in the region of 1.75 million barrels a day. You've got Nigeria who increased production in the region of 50,000 barrels, now producing crude oil in the region of 1.98 million barrels. And Saudi Arabia, again, raising production by about 100,000 barrels, now producing in the region of about 9.7 million barrels. So what we have here, to sum it up, is excessive inventories being built up, in Cushing, Oklahoma, the delivery point of the futures contract. Okay, we've got stronger than expected American data from the non-farm payrolls, which, as I explained, impacts the dollar. We've got weak Chinese figures, economic data figures, and we've got OPEC continuing to raise production. So weak demand, excessive supply. So we had an exceptional week last week, and we've seen a lot of volatility in the markets. So what are the bulls doing? Okay, the bulls seem to be coming into action again. It's been a long time since we've seen them dominate anything. So what exactly is going on? Last week we saw a drop of 6%, then we saw a rise of 7%, and then another drop of 6%. Extremely volatile. I haven't seen this kind of volatility in oil in a very long time. So what's behind this? Now, what I've explained before, we are excessively oversupplied with crude oil at the moment, and there's just exceptionally low demand for crude oil. The only thing that can turn crude oil around is a cut in production of crude oil. Now, whether that cut in production comes via policy or by default, okay, that's what is needed for the market to turn around higher. Now, clearly, via policy, we're at a stalemate. OPEC members, non-OPEC members, nobody's interested to cut production. So, as far as that is the status quo, we are fundamentally bearish, okay? However, we've seen a bounce of almost 20% off the lows, okay? Technically, that is actually a reversal, okay? So what we've seen here, what is the reason for this? Now let's have a look at the rig counts, okay? This is one of the reasons why it's been bouncing so hard. The rig counts in the US, according to Baker Hughes, another 83 rigs were shut down last week, and the week before that, we had a shutdown of about 94 rigs. Now, this decline is about, off from the highs of we're off about 25% since October. So very steep decline in rig counts, okay? Now, something that has been having a far stronger impact on crude oil prices to the bullish side is the strikes that are going on. Now, the United Steelworkers Union, basically the union that represents almost, 2/3 of America's oil. Some of the members have obviously gone on strike, so that basically 9 refineries in the US went on strike. Now, last week they had been negotiating a deal with Shell. That deal never came about, so that the negotiation was pushed forward to this week. Now, the concerning thing here is that the last time the USW went on strike, it lasted almost 3 months. This is back in the 80s. So of course, as oil traders, we're very edgy about what how long this strike would last, because we do know that the USW, the United Steelworkers, they can drag things out if need be in order to meet their objective with the oil firms. Now, to add fuel to fire, 2 more refineries went on strike as well. Basically, a couple of BP refineries went on strike. Now, that raises a potential disruption from 10% to 13%. Now, USW, like I said, represents 2/3 of American refineries, roughly 30,000 workers. So, traders generally from the bullish side are extremely edgy. If this strike does not come to some sort of conclusion very, very soon, the potential the potential refinery disruption could be massive. So as a result, the smart shorts have booked some profits and are now basically that is one of the reasons you've seen this massive oscillation in prices, 6 and 7%. It's kind of indicative of people unwinding some of their positions, possibly to the short side. So you get these wild swings. So these are generally the main factors that are pushing oil slightly higher. Like I said, there has to be some sort of disruption in crude oil production, whether by policy or by default, such as refineries going on strike and something like this, or possibly geopolitical tensions or something of the like. So yeah, that is what the bulls are up to this week. So what are my trading levels? Now, for those of you who have registered to receive some of my oil reports or have followed me on Twitter, you will know that as of last week, last week's oil report, I went long crude oil at $49.90. Now, basically, the market currently is trading at about 52.71. Now, I have already brought my stops up to break even. So in the event that the market was to reverse, it will be stopped out at break even. So whatever happens here on forwards, if it continues to rally, we're still in the money. Now, had one taken that trade with myself last week and entered at 49.90. The market is currently at 52.71. As I said, $20 a point. Had I traded that for you, $20 a point, you'd be currently up somewhere in the region of $5,620 in gross profit right now. But obviously the position is still open. The target has not been met. from last week. The target is slightly higher. If you would like to know where my target is, please do get in touch. Now, to get my exact trading levels, via my oil report, please use my contact details on the following screen, and one of my team members will be in touch with you and take things further from there. Note, like I said, you can also follow me on Twitter. I do send out tweets when I'm engaging in the market occasionally, and I also, any breaking information, I do share it immediately as well. Relevant breaking information, that is. So that's all from me this week. Thanks for joining me once again. I look forward to seeing you next week.